Hey everybody, it's Jane Johnston with the BriarHillGroup at REMAX Camosun, host of Vancouver Island Time, and I'm here with...
Hi everybody, it's Andrew Plank with Royal LePage, co-host of He Said, She Said, They Said with JaneJohnston.
Yeah, we're going to be talking about a real discussion in real estate today. We're going to be I think this is a very interesting topic because I had a listing on the weekend and two realtors asked me, which surprised me, why was I listing below assessed value? So we're going to talk about different types of valuations. All right, but let's go over the what's going on with the market. Yep, and there we go. Got it. Okay. Well, actually, first of all, how was your weekend?
You know what? I kind of took yesterday off. So it's Saturday, but I actually took the day off. I had a really lazy day. And it was really funny because I got a call Saturday night from a client around 8 o'clock. I had a friend over and I said, I'll call you in the morning. So I did that Sunday, and that was, I think, the extent of my work. Otherwise, I kind of, I didn't exactly ignore the phone. There just wasn't a lot happening. My buyers are all waiting for the right property to come up. And those don't generally come up on a Sunday. So yeah, interesting. How about you, Jane? I'm sure you were pretty busy.
So I went up to do some work at Shawnigan Lake. I was in a painting party. I don't know if you can see the paint on my hand. And then
your little vacation getaway place.
Yeah, and then I ended up booking. I think I viewed 9 properties yesterday, and it's funny how it stresses me out to set up the viewings, and then once we get going, I'm like, this is fun. I really enjoy it.
Yeah, setting them up can be a lot of, well, first of all, you've got to figure out, are they available first before you even make the request? Because half of them aren't. Do they have tenants, or do you need 24 hours notice? You've got to set up this whole thing and figure out your route, and then you make your requests, and then half the holes get cut in them. So yeah, that's super stressful. But once you're out viewing them, that's like, oh, this is a neat home. I like this. Oh, I got to get this for my client. Oh, I'm glad my client likes this one. It's just fun.
Yeah, and also listening to them. And then today I'm setting up more for tonight. So
same clients, all 9 for the same clients?
Because I realized what was the what they really wanted, and what we were looking at wasn't the same thing.
I see. Right. Yeah.
So I think part of the skill of real estate, as you know, because we've been in the same amount of time, is really listening to what your clients want. And I remember actually I was at a party at Andrew Nicholls' house, and I was in the it was a Christmas party. There were all these people, and Andrew and Bonnie have introduced me to a lot of people, and I'm like, wow, they all have different houses, like completely different houses for different people.
I always say, we all inhabit the same world, but different universes, I guess. Like all of our worlds are different, how we see the world, how we interact with it. And so what we consider home and important to us in terms of home is different. So it's amazing. And that's actually one of the fascinating things about real estate. It's amazing social experiment, I guess. Just really getting to know people and knowing this just wide diversity that is us.
Yeah. And I think the initial interview is what helps you determine what the needs and wants are. And if you don't take the time to do that, you can waste a lot of everybody's time.
Right. We've all had the experience where somebody calls us and says, hey, can I see this property? Can I see that property? They called you out of the blue, and you kind of just start with the ground running. And if you don't take that step back and say, hey, wait a sec, why are you wanting to see these? What's important to you? What are you trying to accomplish? What are your long-term goals? What are your hobbies? Some people don't want to get into that, which is fine. Maybe they're just looking for an investment property, but getting to understand what they are looking for and then going for it. But
yeah, exactly.
There's a saying in real estate. It's an unfortunate saying, but it's that buyers are liars. And it comes from it's an old school saying from the old school realtors, I would say. It still comes up every once in a while. And it's that expression that a realtor's been working with someone for a long time, and then they find that the buyer bought something from another agent or bought something that they really hadn't thought that the agent hadn't thought they were looking for. And the agent was blaming that on the buyer, but it was not the buyer's fault. It's always really our responsibility to really listen and try to better understand. And if someone is not doing what we think they are doing, we've got to figure out why.
Yeah, exactly. Yeah.
Anyway, we've got some stats to talk about. We've got a couple of guests. Exciting.
Yes. So you're looking at 45 degrees off.
I'm looking in your eyes while I'm talking instead of looking at the camera.
Yeah, look at the camera.
I am ready.
Okay, let's get this going.
Every week.
Okay. All righty, here we are with the stats.
Yes.
You want to start off?
Sure. So what's interesting is last year when COVID hit, we had just this deadening of the market and everything went quiet for a few months. And then things started coming back gangbusters. And this is, I think, where we can start to see that happening, where now if we look at the top set of stats, we can see year over year from June 2020, there were 808 unconditional sales, whereas so far this month in June, there's been 384 unconditional sales, and we're halfway into the month. So we're getting close to being on par. Last year, there were 1,430 new listings coming on market. This year, so far, only 585. That's a little less, I would say, than being on target. And last year, we had many more active listings at 2,698 versus 1,502 this month. Jane, do you want to take it away for the market watch?
Sure. Actually, I just want to say, I think a lot of the active listings last year were condos too, not particularly houses. So that's interesting to me because remember we were talking about how condos didn't rebound as much as houses. Okay, so new listings in the past week, 282 with 237 pending. So earlier in the year, we were looking at a 1-to-1 ratio. Now we're down. So that says to me the market's slowing a bit. 54 price decreases also jives with that. Yeah. And then, as we always say, the sold ones are 123. Those are the ones that happened a few weeks ago. So
yeah. And again, 13 expired and 5 withdrawn. So there's people who are not being successful or changing their plans in real estate.
Yeah, and sometimes that can just be because people are relisting. So they may come on. I've done that with a client. We come on a new price and we show up as a new listing. And people who are like, if you go to a new price point, literally people are just seeing you. Yeah. So.
Absolutely.
All right, let's bring on our guests. So we have two today. The first one's Andrew Nicholls. He is with Strathcona. Sorry, I'm going to let you introduce yourselves. Strathcona Appraisals. Welcome, Andrew.
Thank you for having me.
And the other person is Katie Snell. She is with CR Island Appraisals. Welcome, Katie.
Thank you for having me.
No problem. So we, the reason why this came up is actually we were talking about it coincidentally last week. This people see assessment, and Andrew and I were actually on the MLS committee at the same time when we talked about whether or not assessment should even be on a real estate form because they're not related. So first of all, let's talk, what are the 3 different types of valuations? So one is the one that we do as realtors, where we look at what's current, what's sold, so completed, and what's pending, so what's happening right now. Katie, how do you guys do your market analysis?
Yeah, so we look a bit at kind of what's out there right now, but we primarily have to rely on historical data because a lot of the times appraisals need to be relied upon by banks and financial institutions. So we actually have to prove that the value is there and it's actually occurred for other sales. So appraisals can be somewhat tricky if somebody's looking to use an appraisal for selling. We might not be at current market rates. Because it depends on what's happened in the past. Like when it's a market like this where things are changing every day, it can be a bit tricky because we're relying on historical data.
Right. So appraisals in a market that's really steady are probably going to be pretty accurate in terms in relation to what a market analysis, a realtor's market analysis might be. But when it comes to a really changing market because you're using objective, proven data of proven sales. You are you have to use data from the past.
Exactly.
And in a changing market, we have to use a bit more gut, and we also look at what the competition is doing, which makes for that difference. Yeah.
Andrew Nicholls, are you okay?
He's gone sideways.
I'm not sure what happened. He all of a sudden went off. Okay. Andrew, do you want to just take out your earphones and maybe? Okay. Well, we can hear you.
Can't hear anything.
I can hear you. You just came through a moment ago. Try again. He's not hearing us.
Okay. Well.
Okay, move your mouth and I'll make words. Nope. Okay, let's let him work through that, and maybe we'll continue here. We've been talking about appraisals versus market evaluations versus property assessments. And so, Katie, you worked actually as an assessor as well at one time.
Yeah, I started at BC Assessment and worked there for 4 years, and then now I've doing fee appraisals for about 7 years now.
How would you define or differentiate a assessment versus an appraisal versus a market evaluation?
Sure. So the assessment, yeah, it's kind of its own thing because it's based on one specific day of the year. So it's based on the value as of the July 1st of the previous year, and the state and condition of the property as of October 31st of that year. So if we're looking at this year's assessment, it's actually based on what the value was in July 1st, 2020, and what the status of the building was. So if it was new construction or if it was under construction as of October 31st. And so BC Assessment, they do what they call as a mass appraisal. So because their portfolio is so huge and they have to value so many properties, they kind of tend to do like models where they take averages for certain type of properties and derive the values that way. Whereas an appraisal, it's a one-off specific to that property and for that specific date that the effective date of the appraisal is. So they're kind of totally different ways to value and just for different purposes. So.
Yeah, and the purpose is generally for tax purposes so that the municipalities can assess taxes. Is there any other purposes beyond that?
Yeah, it's mostly taxes. First Nations, although they don't tax often, they'll get BC Assessment to do a value so they can do their own taxing or however they, but yeah, primarily it's just for the municipalities for taxation purposes.
Gotcha.
And the other thing to note is that BC Assessment is independent. So they do it independent. They're not hired by the government or anything like that. You guys are totally independent. I find a lot of people go to BC Assessment to find the information on what's sold. So that information is available. And also you pull data from permits filed at the municipality, right? As well as self-reporting data.
Exactly. Yeah. So, so where could be some discrepancies with the assessment versus a listing price, say, BC Assessment, well, first of all, it would be based on maybe a year prior their valuation. But the other issue is they might not have the permit information. Like if somebody did significant renovations and not necessarily pulled permits, BC Assessment's not necessarily going to know about that. So in the market size, yes, the value is much higher, but in BC Assessment, they don't know that you've got a whole new kitchen and that sort of thing.
They often don't know there's a suite in the
exactly,
basement, right?
Yeah, a lot of people put suites in illegally, and of course they're not going to know. Yeah. So that would explain partly the spread in assessed values and why assessed values, especially with the block evaluations where, you might be painted with the same brush as your neighbor up the road, which you may be higher value or lower value than the average in your neighborhood. And if they're doing a blanket assessment, you're going to sort of just fall in there without having someone actually, they do actually come and view some homes. Is that not right? Or is it overall from the desk?
Yeah, usually like when it's like new construction, somebody will go out there and that'll be it. But other than that, unless there's kind of a reassessment project per se for like a certain type of property, they're not necessarily going to go door to door. Unless, or if you're under appeal, they might come and take a look.
Right.
But yeah, generally it's from the desk.
Yeah. Right.
And Andrew, what do you do you are an appraiser. So you also look at unique properties. So island properties and stuff like that.
Yeah, I go to the Gulf Islands a lot, which is always interesting.
So what are you looking at when you do an appraisal?
We're looking at it in its current form. We're looking at it we give it an effective age. So it's not just the age of the house; it's how well it's been maintained. It's is there 2 bathrooms instead of 1? People want more bathrooms now than they used to. Is there a suite? We're looking at it. We kind of look at it as if we are a buyer. So it's not we're not crawling into the crawl space and like an inspector, but we're looking if it has market value, if it has market appeal. We want to see if someone wants to buy it and what it would compare to with the recent comparables and how well it would compare with those.
And do you guys, maybe either one of you can jump in here. So to me, there's different times when you're going to get a market appraisal, a house appraisal. So one is for lending value for a mortgage, and the other is for a settlement of a divorce or separation.
There's definitely there's market value for divorce. There's to justify the sale price for a new mortgage, or it's just refinancing. I noticed this year a lot of shopping around because rates were so competitive. So just shopping around, each bank needs a new appraisal for every time that person goes to get it, shop around, then the bank wants to know what the house is worth.
And the other would be like estate planning.
That's right, yeah.
Or if you're wanting to do some improvements, a lot of the times we'll do like an as-is valuation and then as proposed to support that.
We did that with this place when we just purchased our homes. We did a purchase plus improvements. So the appraiser came through and set a baseline, and then really they just had to come back afterwards and show that we did the work we were going to do and that it was done substantially complete and as per our proposal, and then pays it out.
We also use an appraiser before we wrote an offer. So we got the appraisal, then we wrote the offer.
I feel like I've been doing more of those in this market too. Realtors want to make sure that their offer is justifiable. Yeah.
Well, yeah, because if the lender will not, if the appraisal comes in far below the actual accepted value price, then the lender is going to have a problem with that and perhaps either not lend or ask the buyer to put a much more substantial deposit down or down payment down. So that's really wise to do that as long as you can actually get someone in advance.
Right.
And so I understand a rush appraisal is available at a premium. Is that what you would be doing then at that case? Because I know you're all very busy right now. So getting someone in, prior to making an offer, it sounds like a little bit of an addition.
Yeah, definitely. If I get a phone call saying, "Can you do it, for today or for tomorrow?" Then, we can make it happen for for the right price.
Right. Yeah. Got it.
Yeah. But it's just nonstop work requests. So it definitely is hard to prioritize rushes these days because everything is a rush.
Yeah, exactly. We're all so rushed, and everybody's priority is their own priority, and yours is.
Yeah, exactly.
Let's just talk a little bit about who the beneficiary of different assessments is. So the first one is for property tax assessment. The beneficiary is the municipality, correct?
Mm-hmm.
Yep.
because they're using it to determine mill rate. And for me, what I think is if they're doing an average, if BC Assessment's doing an average, then half is going to be above and half is going to be below, and then people are going to appeal. And then we have our numerical value that we're going to then determine what the mill rate is, and then everybody gets their taxes for July, right?
Yeah.
There's the funny situation with property taxes or the assessment where people want their value to be lower, so their property taxes are lower, but they always want the appraisal to be higher.
Yeah.
So they can borrow more or afford to buy the house. But everyone wants their assessment low.
They want their assessment low until it comes time to sell their house.
Yeah.
Yeah,
exactly.
As well.
Yeah.
Do you guys ever, Katie, do you ever have people argue their assessment from you, their appraisal?
Well, so when I worked with BC Assessment, yes, I had a lot of people. We were always trying to usually bring the value down. But for appraisal, it's usually the opposite. If they have an issue, they want the value to be higher, so they can borrow more. Especially if it's a developer on a proposed development, like I'll do like multifamily developments or something like that, and they're saying that they can get such and such a door, and it's like, well, I have to go on historical data, so it might not necessarily be easy to prove. So there sometimes can be discussions there, but for the most part, yeah, it's opposite of what assessment. Yeah, it's usually in the public, my fee world, the usual discussions usually to how can we get the value higher, and yeah.
Andrew, you work primarily in the residential industry, right?
Yeah, entirely. Yeah.
So, and you work with properties on islands. So to me, they're somewhat unique. How do you determine their value? Like, do you look at, if there's nothing to compare against, how do you value?
It's tough. Yeah, it's definitely start to just kind of squirrel away information in my brain from every island appraisal I do. But it's been easier right now because there have been so many sales in the Gulf Islands. But they're unique, and you really have to think about it and take your time and know the islands. So the more I go, the more I know the islands, the easier it gets to do, because you know that one part of Main Island is quite different than another part of Main Island, and Main Island is totally different than Salt Spring, and each island is entirely unique, and what people like on that island and where the value is always interesting. So it just helps you're talking to the realtors over there. It can be quite interesting because they really know where the value is. They have interesting insights into what the desirable areas are, and it takes a lot of time though to adjust for the comparables, because you'll have comparables that are really not similar at all, because you may just have a handful of sales to go off of, and you have to come up with something that seems reasonable and justifiable, and it's always,
so there is some magic to it.
Totally. Yeah. There's a lot of thinking and agonizing over it.
I think also it's knowing what it isn't, right?
Yeah.
Like sometimes you can define, okay, it's not up there and it's not down there, so it must be in here somewhere.
Exactly. Yeah. You have like your kind of comparable that's lower, and then you have your comparable that's higher, and one somewhere in there, and then you're just kind of figuring out where your sale or where the property, the subject you're working on, where it kind of fits into that puzzle.
One of the big differences between a appraisal and a market evaluation is appraisals actually come in with a dollar value. Like you'll come in at, to the penny, whereas a real estate appraisal is going to give generally a range and say, I think we can market your property within this range.
Sure.
If you go lower, you're going to have a quicker sale. You go higher, you might be on market longer. You may have to negotiate down, but you're going to, be marketable within this range. Whereas
we're actually figuring like the cost per square foot for the house, and that helps to narrow it down to a specific dollar value rather than a range.
Yeah, one of the tools I like that appraisers, I think, use is the fact that you can also look at properties from a couple different perspectives. Like you'll look at replacement cost, you'll look at income, like what's this property worth as an income producer versus forgetting all the buildings and so on and so forth. What is it actually producing for income, and working that back, if it was bought as an investment, hey, what's it worth? So you can look at it from a couple of different angles, which we will do as well, but not the same formality.
Right.
Katie, you do a lot of commercial appraisals,
Yes.
right?
Yeah. So with that, it's a little bit different than residential, because the residential is typically on a form report, whereas a commercial, we have to do a full narrative report. So it's like about 80-page kind of document usually. And usually we have to go through 3 different approaches to value. So there's the cost approach. So how much it would cost to rebuild it, basically the building, and then depreciate it with estimated land value. And then there's the direct comparison approach, where you're just comparing, usually on a per square foot basis. And then you're doing an income approach. So what can the property be rented for? What would the typical expenses be? And then you capitalize that and derive an overall value. And then you kind of reconcile all 3 values. But usually for a commercial property that's income producing, typically most weight will be put on the income approach, because that's what investors will typically look at and what the lender will want to look at. So that's usually where emphasis is placed in the overall value.
Mm-hmm.
How did you get into that?
Like appraisal?
Yeah.
I did my commerce degree and majored in real estate. And I knew I didn't want to be an agent. So what's the next thing? So I got into appraisal.
How about you, Andrew? How did you get into your work?
Yeah, I kind of bounced around a bunch of different jobs. I did a undergrad in geography, and just didn't quite find what I wanted to do. And my dad started doing appraising probably about 15 years ago, and he said, anytime you want to try something different, there's lots of work. So I finally made the jump and got my designation, and yeah, I love it. It's great.
Yeah, you're good at it.
Thank you.
Andrew and I both kind of fell into real estate, and you owned a camera shop, right, Andrew? And
I ran Camera Traders for quite a long time, and got to the point where I think I burnt out a little bit with retail, and was trying to raise a young family. And I thought, I've always been interested in real estate. Let's check this out. Yeah. And Jane and I, we studied together and got our licenses together. And Jane, you came from teaching. Yeah,
so I just actually couldn't get a job teaching.
Really?
Well, I realize now when I look back, I had part-time contracts, which is very unusual, but it's just so hard to break in sometimes. There's ebbs and flows like anything else, and I happened to be in the ebb time, and so I got offered a job actually about a month after I got into real estate as a contractor, and I finally said, okay, that's it. I'm committing to real estate, and I had my teaching degree or teaching certificate till 6 months ago. I had a little cry.
Oh, you let go.
Gave it up. Okay, one more question. So I find sometimes, like when I look at appraisals, I sometimes find that they may have chosen a different product than what I would have chosen. So
as the comparable, you mean?
As a comparable, yeah. And I'm just wondering, do you guys ever chit chat with realtors about appraisals? Like I find when people call, when the appraiser calls for the bank to follow up on a listing, I say, okay, well, we had 5 offers and this is what happened. And I don't give them like minute details, but I tell them the interest level in the property. And then so they know what's going on. Do you find that? Like, do you have a good relationship with realtors in that regard?
Yeah, like if I'm doing an appraisal and realtors involved, usually I try to at least have a discussion with them just so you have an idea of what the the attraction was to the property. Because typically, like if we're kind of debating between a couple of different values, that could determine if we're on the higher end of the range or at the lower end of that range. If there's multiple offers, and a realtor is going to know things that you don't know or that we don't see on the MLS per se. And so, and sometimes, we might not even be aware of a certain sale. So if a realtor has inside knowledge and is able to share that, and that the more the information, the better, kind of thing.
Yeah. Oh, sorry, Andrew, you probably got a comment.
It's I definitely I prefer if it's a good back and forth with realtors. Sometimes it can be a little contentious if our numbers are widely disparate, but usually it's friendly, and certainly if it's a sale situation, it's in the realtors and my best interest to be collaborative, and I'm always open to if sometimes I'll submit my report and the realtor might have some alternate comparables that they think are useful for a review of my report, and that's always, I'm always happy to look at that. It's not, they might have some interesting insights, like Katie was saying, just some insights into the property that I didn't necessarily have. The more information I can be provided with is great.
We all have the same access to MLS, right? You have access to the agent notes and any background documents and such. Is that right?
Yeah.
And you can access properties through the lockbox keys. So you have a lot of the same tools. We, of course, are out there working with buyers and sellers. So we're having those communications, and we've got the more of that real-time feedback. But we also get calls, and we will call our colleagues when we're trying to establish a market evaluation on a home. Hey, I see this property sold. It seems like it sold for less than it should have. Is there a backstory here? Hey, you got this property sold for a lot of money. Is there a backstory here? What's the deal here? And then we can take that into account when we're talking to our clients and trying to help them establish their own value. That property was in a state, it was in really bad shape. The seller, the executor just wanted to sell it really quickly versus, so getting that background information is really vital and helpful. And
sometimes when, if I find, I'm looking for the best comparables, I'm trying to pick the best ones, and you work through the numbers, and one of them is just off, and it's hard to know. It's hard to know why. You don't know the story about the house or the sale, or sometimes there's just a buyer who was willing to spend more, or the seller just wanted to sell quickly and didn't want to wait for a bidding war. So there's always that is always a bit of a challenge to try and adjust for that, and you're trying to read into why things sold a certain way, and sometimes I just can't use a comparable even if it looks good on the surface, because there's something that happened that isn't really justifiable, and it makes it too difficult to actually use it in my report, and that's always quite interesting.
Like the smell of smoke, or I had a condo once. I got called, how come this sold 10% under asking? It was a pink condo.
Well, Jane, the house that we bought with you last year, the seller, she didn't want to wait around for more offers. She just took the first offer. That was just pure luck.
Yeah.
We're incredibly lucky in that regard, and so some sellers just want to get it over with.
Yep, and it wasn't even a bully offer. It was just a quick offer.
Yeah.
Andrew,
right place, right time.
Did you do your own appraisal on that one?
I did that. Well, I had to get we had to get another appraisal done.
Of course.
But I
you were looking up values.
Yeah, I figured I was in an appropriate price range for my offer. Jane had a few good insights too.
Good.
So if we were to look at a timeline, to me, BC Assessment is looking at properties last year between like May and October with an average on July 1st. And appraiser is looking at the pending sales, so what's just sold. And a realtor is looking at current and pending and determining what else is on the market for competition.
Mhm.
Yep.
So we can really have three very different prices.
Yeah.
Yeah.
Especially in this market. Yeah.
Absolutely.
Yeah. And I noticed with comparables, there'd be a real, more so than in a previous year I've worked, where there'd be a difference from like week to week for that real hot stretch in the early spring where, the comparables would be off from 3 weeks ago. Whereas normally you kind of have a 3-month range of sales where it's pretty good, pretty accurate.
But it makes sense from the appraisal perspective especially when you're doing it for the bank, that any little, a 3-week change could be a blip. It could be a false rise. And if you're using, if you're pulling enough data from historical data and you see this sudden rise, you can't necessarily trust that that's a permanent rise.
Totally.
And so, it totally makes sense that the banks will be more conservative, and then an appraisal has to be inherently more conservative than what a realtor does. We will also look at, is the market going up or down when we're doing a market evaluation, because there's no point to using the past sales in a market that's dropping rapidly and say, we establish your value here because this is what the last, 3 properties sold for, when we know that the property values are dropping. And this is not this case right now, but there's some strategy involved in the conversation around how do we market this home and make sure that it sells. So they're all for such different purposes. And I think the main challenge here, guys, that I come across from a marketing perspective is that that our clients, the buyers and sellers, misunderstand what the purposes of each of these is and how they're applied. And so I've worked with buyers who have said, oh, you know what? I don't want to buy that house because it's selling. They're asking 20% or 10% above assessed value, versus, I want to buy this house because it's 20% below assessed value, and I'm looking at it saying, but it's still overpriced.
Right. Yeah.
And then I'm also working with people where, I see an agent has posted the appraisal in the supplements, and they say appraisal available. And the seller is holding to their value because they've got this appraisal price that says it's worth X or Y, and yet the market has moved on, or that appraisal was, a buyer isn't going to buy something just because the label says this. Mm-hmm. Right?
Well, and appraisals are somewhat subjective too. Like Andrew and I could be looking at the exact same property and same comparable sales and come up with a slightly different value. Hopefully we're within a pretty close range, but like we're going to have different perspectives on what we think that's driving the value. So no two appraisals are going to be identical.
Right. Which is why divorcing couples get more than one appraisal, or it's wise to do so. Because
that's another situation where someone wants the value to be higher and someone wants the value to be lower, and that's
there's right. If one is trying to buy out the other, you're definitely have opposing interests.
Yeah.
I always recommend when people are getting separated to have 3 evaluations. Yeah. It's funny though. I think the law only requires 1.
Yeah, usually we're hired by both parties. Well, in my case anyways, I've done a lot of where I'm hired by both parties. But sometimes, it'll be one side's hiring an appraiser, the other hiring an appraiser. And then if there's too much of a gap between the 2 appraisals, then a third appraisal will come in, and that's kind of the binding value.
Yeah. Okay, so any other comments? Anybody? Closing comments? No? Okay. All right. So, well, I found this informative. I really enjoyed speaking with you guys. I appreciate your time today. So, yeah.
Yeah, thanks for having us.
Yeah,
you're welcome. Andrew Nicholls, how do we reach you?
You can give me a call, 778-440-4418, or you can send me an email, andrew@strathconaappraisals.ca.
Okay, and Katie?
Yeah, my phone number is 250-580-2399. Email is ksnell@crisland.com. Yeah, and I do commercial, residential, anything in between.
Okay,
Excellent.
and Andrew.
You can reach me directly, cell or text 250-360-6106, or email me info@andrewplank.com. Looking forward to hearing from you.
And you can reach me at 250-744-0775 or BriarHillGroup@gmail.com. And I have two websites, BriarHillGroup.com and VancouverIslandTime.com. All right, you guys. So tune in if you have any questions. Follow up with these guys. They're professionals, awesome people, and looking forward to receiving your inquiries. Okay, Andrew, we will see you next week.
And thanks so much, Andrew Nicholls and Katie Snell. Nice to meet you both.
Yeah, nice to
Yeah,
meet
you as well.
Yeah.
Thanks for having us.
Don't forget to tune in every Monday morning at 10 a.m. We're here on He Said, She Said, They Said, a real talk about a real discussion on real estate in Victoria. Take care, everybody. Bye.
Bye, everybody.